All right, ladies and gentlemen, hello everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. And today I wanted to quickly run through something with you. Basically, we had the CPIs, the US CPIs that came out recently. And I wanted to have a look what kind of market reaction we got there. And in a way, what's happening right now in the Forex world. Look, in general, there was a lot of things happening, and I think that the CPIs are one of those important metrics that we need to keep an eye on, especially the US one. But before we jump into all that action, let's have a quick read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Also, don't let's not forget that tomorrow we're getting the US PPIs as well. So look, also before we jump into all that action, let me just quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So now then, let's have a look. Let's look at the economic calendar. And basically, today we got the US CPIs. Where that Thursday? There we go. So the US CPIs came out. The Consumer Price Index came out. So yes, the headline figure looked. Oh, where's that inflation here? There we go. The headline figure dropped by 2.4%. So despite the rise in oil throughout March, the inflation number dropped by 4 tenth of a percent from the previous. And this is not looking good for the US dollar in a way. But I'll show you the chart in a bit. The core inflation, the year on year figure came out at 2.8, just a little bit lower, but just dropped by 3 tenths of a percent. And this figure does not include oil prices. But look, like I said, what's interesting that we are seeing a bit of a slowdown. So in a way, this is all working in favor for the Fed to go and cut rates because, okay, look, up until yesterday's crazy action that we saw from the U.S. administration, I mean that they've made a kind of total U-turn on the tariffs, and of course they still left 10%, and increased in tariffs on China. But okay, that's another topic. And yesterday we had a bigger probability for having a cut in May by the Fed. However, as you can see now, quickly shifted. But okay, this shifted not because of the CPIs. It shifted because of the removal of those major tariffs on the rest of the world, basically by the U.S. What has not shifted was this or actually I would say it's still bouncing around the same levels. So it's bouncing around between 3 and 5 cuts by the end of this year. So look, 1, 2, 3, 4, 4 cuts. I mean, we had previously 5 cuts. Okay, now there is an expectation for 3 cuts maybe. So basically, it's now shifting back to normality. So you see, this is what we needed. We needed not something like crazy that was getting proposed by the new administration, but we needed the normal market conditions, market action, and we're getting back to normal now. In a way, if you watched my previous videos, I was talking that everything is in the hands of one person. Now, basically, everything is in the hands of two people, the leader of the new U.S. administration and basically the head of the Federal Reserve. Now, look, what can I say? Given that the inflation has dropped, this kind of puts the Fed towards this, it puts them into a more comfortable position where they initially wanted to be. Basically, they wanted to stick to no cuts in May, and then at least like something like 3-4 cuts by the end of this year. So now in a way it's like back to normal, right? The June projection that is that we are going to get a cut, so which is again back to normal. But like I said, and the current inflation number is helping out here, giving a helping hand for the Fed. So, what's happening with the U.S. dollar? U.S. dollar, of course, is not loving the situation here, and we're seeing a decline. And another thing is that given that we could see those, still those cuts. This, of course, puts more pressure on the Fed. However, somebody would say, "But hey, now we should have less cuts than when we were previously in this madness." But this is what I'm saying. This is now we're going into these metrics. Now economic indicators do matter, and it's not the fact that inflation is dropping. That's not really very helpful for the US dollar here. You see, this is the thing. The problem right now with the US dollar is that it's not really good in most of this. It doesn't matter from which side you look at it, it's still not good. Because if we had, if the new administration wouldn't do this U-turn, which they did yesterday, still the U.S. dollar would be suffering because again, all these tariffs are making the U.S. economy suffer mostly. I would say, yes, it's forcing others to kind of rethink their strategies as well. But let's face it, I mean, the U.S. economy is a very consumer-based economy, and they need cheaper goods. But anyway, so look, I would say this way: at the moment, we're seeing this decline in inflation. This kind of supports the Fed's further possible rate cuts. Is just that maybe not at that fast speed that was initially and as initially everybody thought so. So maybe we'll see some bounciness here in the U.S. dollar, but in a way, for now, still the downside scenario is not off the table. We're still aiming further south, but let's not forget that we could see a little hold up somewhere near this upside line right here, which is taken from the lowest point of July of 2023. So in a way, we have a little bit more room left. So the target, it's basically coming to the point where I said to you in my previous videos that I am aiming for that 100 level, and I think that that's quite possible. So the psychological 100 level, I think this is could be quite doable, especially even also looking from the technical perspective, and not to mention already the fundamentals. So everything is kind of pointing towards a weaker dollar, at least in the near term. Later on, we'll see. Maybe it will shift very quickly if inflation starts picking up. Then yeah, we could see U.S. dollar reversing back to the upside. But at this point, I think everybody's who is trading something, all the bulls who are, the bulls of other major currencies which are against the US dollar, they're enjoying their moments. Looking at the USD JPY, for example, here, the yen. Okay, USD JPY, here we have a situation where the yen is already like a safe haven. Nevertheless, we saw yesterday a nice reversal back up, but again, we understand why, because the stock market soared and everybody was kind of jumping out of risky assets. But looking at this pair right now, I mean, you can for today, you can see that we're having a major drop now. With USD JPY, I said it before, I'll repeat again that I am leaning towards the downside, but I need a confirmation breakout here, which is, for me, on my chart, is roughly around 144.55 zone, somewhere around here. We could see some sideways action given that we're in this really uncertain period. So one day we have tariffs, the other day we don't have tariffs, and yeah, so it's really unstable, and that's why I believe that the stock market could also remain a little bit on the vulnerable side. Well, we're seeing the futures. Well, this is the cash index. We're seeing the cash index right now drifting a little bit lower here on the S&P 500, but I think that that's just a normal reaction, normal retracement from the highs. Like yesterday was crazy. The S&P kind of The S&P almost like 10%. I mean, that was like spectacular. So yeah, I mean, not to mention the Dow, which did like a lot did almost three something thousand points, and Nasdaq, which did like 12.5%, if I'm not mistaken. But anyway, yeah, you see the what I'm talking about here. But yeah, coming back to the US dollar, yes, like I said, I think that there could be some more downside. That this means that currency pairs like Euro USD could still drift further north, and this is what I talked about previously when I covered these asset classes in my live sessions, which you, by the way, can join. The next one is tomorrow, Friday, the weekly wrap up. So the Markets Talk webinar, you can, like I said, join us on Markets.com. You can see that one is going to be scheduled soon. But yeah, keep your eyes on it, and keep your eyes on Euro USD, because again, I'm still leaning towards the upside. But again, I'm not saying that I'm going to get very, very bullish. No, because we have this downside line taken from the highest point of July of 2023. So in a way, initially that could be a nice good area of resistance, but then if that gets cleared, certainly yes, it opens the door to some higher levels. But I think that this is where we will stall a little bit, because again, if we reach the 100 mark on DXY, then maybe this could be somewhere of an equivalent to reaching the area near the 1.12 zone, maybe a little bit below that. So let's see. Let's not rush into things. For now, if you've missed this move, look, you can wait for it. Let's see if we can reach that 1.12 territory somewhere here, and we'll go from there on the Euro USD, GBP USD. Similar story. We're having a nice boost here because of the weaker dollar, but let's not. The bulls should not get their hopes up yet, because for me, my upside scenario here is on a break back above the 1.3014 zone here, and then we'll kind of, and then I'll get a little bit more comfortable with the upside. Let's have a look at what's happening with gold. Gold is wobbling a little bit. It had a totally big massive reversal, as you can see yourselves here, and we're currently staying above that 3114 zone. I talked about this in my webinars. So in a way, this kind of idea worked out nicely, because what I said yesterday, that if we do pop and stay above the 3057 territory, my next target is the 3114. Well, tick. Now I'm saying this. Now, if we do remain above the 3114 zone, I'm aiming for the all-time high. That's what I'm gonna do, and maybe even for a new one. And then we'll see. Are we gonna create something of a double top here, or actually are we gonna, break the 3,167 and just continue traveling north? Let's see. Let's see what's gonna happen there. But yep, yeah, I think that you should be very carefully monitoring. If you are trading something US dollar denominated, then yes, you keep an eye on tomorrow's data as well, because tomorrow we're getting the US PPIs, and yep, the producer price index is expected to increase a little bit. However, now at this point, I'm kind of being a little bit more on the skeptical side. To be honest, because I want to see if it's not going to actually come out much lower. So again, it will be quite interesting. Like, I'll keep an eye on the year-on-year figure. The core PPI year-on-year number is expected also to increase, but again, let's wait for the number tomorrow. So I normally say to people, look, if you're not comfortable with something, just don't touch it. Don't pick up on it. And if you can, if we can just wait until all our boxes are ticked in our strategy, then you approach the market. So that's kind of the very important, very, very important move here. So if the PPIs come out on the lower side, well, like I said, that's where I'm kind of leaning towards that idea of DXY reaching the psychological 100 zone. Hey, let's see. Let's see if that's going to play out as expected. So let's see if the number is going to come out on the lower side. I would prefer, of course, personally, to see a number below 3.2, below the previous, not only the forecast, but just the previous. If it comes out below the previous, then, like I said, I'm kind of leaning towards a dollar, which is going to be like getting closer to 100 territory. let's see. Again, this is just an idea. This is just an analysis based on what's happening right now. So that's why I wanted to do this next video after the CPIs, just to see what's happening, so that we could at least roughly project ourselves, or project not ourselves, but project what could happen tomorrow. Let's see. So, ladies and gentlemen, I hope you found this useful. Thank you very much for watching and listening. I really appreciate your time. So tune in tomorrow to my weekly wrap up video. It's live. The whole point of it is for you to kind of ask questions, to interact. Hey, we can debate a little bit if you wish, even. But yeah, thank you very much for watching and listening. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you tomorrow in my live session, the Markets Talk webinar. Oh yeah, don't forget to subscribe to Markets.com, and you will not be able to miss that video as well, that live session. Thank you very much, and bye bye.